Then after 35 DDA, what did I teach? 36. 36 also, no? Good. So now we are in the 36.1 and 36.1 3A. 36.1 3A. See, this clause talks about deduction for discount on zero coupon bonds. Deduction for? So even the discount which is given on the zero coupon bond is considered as expense. Even that is allowed as a deduction. But for that, who is going to get this deduction? Can't tell me. Who is going to get this deduction? The person who will issue the zero coupon bond will give the discount. And for that person, it is expense, will be allowed as a deduction. Who will issue zero coupon bonds? And what are zero coupon bonds? Anyone has heard anything about zero coupon bonds? Come on, tell me. From name also you will get the idea. Zero coupon bonds. These are the bonds on which you don't get any interest. Zero coupon means zero coupon rate. Coupon rate means interest. Zero coupon. Coupon means interest. In technical terms, meaning of coupon is interest. So will you get any interest on these bonds? No. Then why would you buy it? If I am issuing zero coupon bonds, you are an investor, you have money to invest, will you buy zero coupon bonds if I'll not give you interest? Still people buy. Because it is issued at heavy discount and maturity happens at par. For example, if the par value, meaning the face value is 1000, face value is, its issue price is 700. Heavy discount. 300 rupees discount will be given upfront. Give me 700 right now. After 1 year, 2 years, 3 years, whenever the bonds will mature, at that time you are going to get par value, 1000 rupees. Give 700 right now, get 1000. Now will you buy? Yes, many people buy. But zero coupon bonds are not issued by everyone. It can be issued by specific investors, specific issuers. And who are those specific issuers? Infrastructure capital company, infrastructure capital fund, any scheduled bank or any public sector company. Full forms I have written here. Okay, no? Infrastructure capital company, infrastructure capital fund, any scheduled bank or a. So they are issuers. They will issue the zero coupon bonds. So now let's take it here. Who is the issuer? Come on, tell me. Issuer of zero coupon bond will be infrastructure capital company or infrastructure capital fund or any scheduled bank or any public sector company. They will issue what? Zero coupon bonds, ZCB. Now to whom they will issue? Investors. They will issue to any person who is an investor. Now they will issue at par value or less value? Issued at discounted value. And whenever the maturity will happen, the money will be given. At that time, the money will be given. Right now? So first of all, this person to whom the zero coupon bonds are issued. Okay, no? That person will give the issue price, and after the maturity, what will be given? Face value at Maturity. Okay, no? So the difference between, what did I say? Difference between the issue price and the maturity price is known as discount, which is given by the issuer, and that discount is given to the investor. For investor it is a benefit, but for the issuer this discount is loss, it is an expense. So for this issuer, under the head PGBP, we are talking about this issuer. We are talking about this issuer. For this issuer, the discount on zero coupon bonds, which is nothing but maturity value minus issue price. Maturity value minus this discount will also be allowed as a deduction under PGBP head. That is what clause 3 says. Now my question is, the discount will be allowed as a deduction in which year? The year of issue or the year of maturity? Year of issue or year of maturity? No. Year of maturity? No. Year of issue? No. This discount will be allowed as what? As deduction under the head PGBP on pro rata basis over the number of previous years covered by life of that zero coupon bond. So you have to see how many previous years are covered by the life of this bond. So that entire discount is not given for 1 year, year of issue. That discount is not given for year of maturity. That discount is given for the life of the bond. So for this much life, total this much discount is given. So spread this discount over the life of the bond. Yes or no? For example, if issue price, date of issue, let's say date of issue, okay, no? Issued on 1st of July 2025 and with a maturity of how many years? Example, 3 years. So the discount will be given for these 3 years. So that discount has to be spread over this period of 3 years. But this 3 years is not coming in 3 previous years. This 3 years will be spread over 4 previous years. How come? See, issued on what date? This is previous year, 25, 26. Right now? Now 3 years will end on 1st July 2025 to 26, 27 and 28. 1st July 2028. Here it will be maturity. Yes or no? This is the life of the bond. So the bond is issued for 3 years, but 3 years is spread from previous year 25, 26 to previous year 28, 29. How many previous years are there? So you have to spread it over the period covered in these previous years. So some discount you will claim in 25, 26. Some you will claim in 26, 27. Some you will claim in 27, 28. Some discount you are going to claim in 28, 29. So you have to claim the discount. The deduction of the discount will be available over the number of previous year. Over the number of previous year covered by the life of the bond. Now tell me, how much is the life of the bond? 3 years means how many months? Out of this 36 months, how many months are covered in 25, 26? Out of the 36 months, how many months are covered in 25, 26? Only 9 months. Yes or no? Then 26, 27. 27, 28 and 28, 29. 3 months. So entire 36 months is spread over 4 previous years. Out of 36 months, 9 months life will be there in 12 months life. 12 months life will be in 26, 27 and 27, 28. And 3 months life is. Now for example, if the issue price was it was 700 and maturity is happening at 1000. So what is the discount? So that discount is 300, that is for the life of the bond. So has to be spread over the life of the bond. Yes or no? So this 300 is the discount for how many months? Out of that, 9 months interest, 9 months discount will be how much? 300 divided by 36 into 9. How much? 300 divided by 36 into 12. Here also, and here it will be. So this way your discount you are going to claim. So that issuer is going to claim the discount as a deduction under the head PGBP, but that entire discount will not be allowed once in one previous year. No. It will be spread. This will be allowed on pro rata basis based on the life of the bond. So you have to claim that discount over the number of previous year covered by the life of the bond on a pro rata basis. What basis? Okay. Now out of the life of the bond, some life will come in this year, some life will come in the next year and the year of maturity. So this entire discount is for 36 months. So how much will be the discount for the 9 months life which is covered in my previous year? How much will be the discount for 12 months which is covered in the next previous year, and how much will be the discount for 3 months of the bond's life covered in the previous year, 28, 29, that discount you are supposed to calculate. So out of 300, how much will be allowed in this year? How much will be allowed in the next year? How much will be allowed in next to next year? And in the last year, out of 300, 25 will be there. This way your 300 discount will be allowed as a deduction. Understanding? So we have discussed from the point of view of investor, we are going to talk in capital gains. For him, the capital gain will arise. How much? This entire 300 which is an expense for someone, that 300 should be income for the investor, no? So that 300 is taxable as capital gains in the hands of investor. That we are going to see in capital gains. Okay, no? Should I move ahead? Now, very important discussion. (36) Subsection 1, clause 4, then clause 5, and then clause 4a. These 3 clauses we are doing together. Okay, 3 clauses we are doing together. This is assessee. Assessee can be, but this assessee is an employer. Now this assessee as an employer will contribute. Where he will contribute? He will contribute here or here or here. So if you are an assessee, you are an employer, you are contributing to your employees RPF account or ASAF account. RPF account you know, na? Recognized? Of your employee. In that provident fund you have to make the contribution. So you are making contribution to RPF account or approved superannuation fund account of your employee. You can also contribute to approved gratuity fund of your employee in your business or profession. Employee in your business or profession. So in your business or profession, whatever employees are there, in their approved gratuity fund, you are making the contribution. So this will be allowed under 36 subsection 1 clause 4, and this will be allowed under section 36 subsection 1 clause 5. So clause 4 says that this contribution will also be treated as your expense. Claim it as a deduction. And clause 5 says that this contribution will also be treated as your expense. Claim it as a deduction. So from your business income, you can take the deduction for these two expenses. Whatever contribution you are making to RPF account of your employees, ASF account of your employees, or whatever contribution you are making to employees approved gratuity fund account. Understood? But this will be allowed under clause number 4 or clause number 5 subject to 43B. Subject to this year's contribution will be allowed as a deduction in this year only if actually contributed till the due date of filing your ROI. If till the due date of filing ROI this contribution is not made, then this contribution will not be allowed as a deduction from this year's business income. Yes or no? Will be allowed as a deduction in the year in which actually contributed. From that year's business income you can claim. This year it will be disallowed as per 43B. Will you remember? So even if you are following mercantile system of accounting, will not make any difference. This year's contribution will be allowed in this year's business income only if actually contributed on or before the due date of filing ROI of this year. Otherwise it will be disallowed under 43B. Will you remember this? Sure, sir. Next one. Are you an assessee? Employer also? Can you make the contribution to NPS account of your employee? So that contribution will also be allowed up to maximum 14% of your employee's salary. So whatever you are contributing to the NPS account of your employee will also be your expense. We are going to allow that also. But remember, it should not be more than 14% of your employee's salary. Now in this salary, what are you going to take? Basic and DA in terms. That's it. What are you going to take? Whose basic? Your basic. Are you an employee? You are an employer now. Now you have to see how much was the basic of your employee. How much is DA in terms? So as an employer, whatever salary you are giving your employee, basic and DA in terms, take 14% of that. Take your contribution to NPS should not be more than this amount. Your contribution to NPS should not be more than this amount. If your contribution is less than or equal to 14%, full contribution will be allowed as a deduction. But if your contribution is more than 14%, then up to 14% will be allowed, but excess will be disallowed as per 40A subsection 9. As per 40A subsection 9. So see, up to 14% of employees' salary will be allowed as a deduction, and this deduction is available. This deduction is available as per section 36 subsection 1 clause 4A. Clause 4A. See, I am writing this thing is allowed. This thing is allowed as per clause 4. This thing is allowed as per clause 5. and this thing is allowed as per clause 4A. Yes or no? Now why I am writing them separately? Because this and this will be allowed subject to 43B. Yes or no? And this will be allowed on actual basis. This will be allowed on actual amount contributed in this year. So whatever amount contributed in this year will be allowed in this year. Whatever amount contributed in the next year will be allowed in next year. This is on actual basis. So here, how much actually you can contribute? Maximum 14%. Maximum. Now if any excess is contributed, excess contribution to NPS over and above 14% of employees' salary. So that excess will be disallowed, and that is given in section 40A subsection 9. Understood? Only to the extent of 14% we are going to allow here. Anything over and above that 14% will be disallowed. But there is no monetary limit on RPF, ASF and approved gratuity fund. Okay, what is approved gratuity fund? You know, POGA. So if the employee is covered by Payment of Gratuity Act, if the employee is covered by payment of, so employer has to compulsorily make a gratuity fund and get it approved. Every year some amount has to be contributed to gratuity fund, keeping aside some amount every year. Provisions are made. Yes or no? So contributing to gratuity fund meaning I am making a provision every year that in future whatever employees are going to get retired, I am supposed to give them gratuity. So what if I don't have money at that time to pay the gratuity? I cannot say that I don't have money. For that reason only this gratuity fund is created. Whether I have money or I don't have money, this gratuity fund will have money. For that, every year I have to set aside some amount in this gratuity fund. So out of this year's profit, I have to put the amount in gratuity fund. Next year also, out of my profits, I will have to put some amount in the gratuity fund, approved gratuity fund. And whenever the employees will retire, I will have to pay them gratuity. I will pay that gratuity out of the gratuity fund amount. At that time, I have enough money to pay them gratuity. So this is the requirement of law. Payment of Gratuity Act says that I have to provide, I have to set aside some amount. Out of my profits, I have to keep some amount aside. I have to contribute that amount to approved gratuity fund. Understanding? Now, this was deduction under section 36(1)(4), 36(1)(5) and 36(1)(4)(a). Now tell me one thing. Contribution to RPF account or ASAF account. This contribution, right now? And one more contribution. Contribution to approved gratuity fund account. Tell me, this is allowed under which section? This is allowed under which section? 36(1)(4). This is allowed. 36(1)(5) says that this is also allowed. This is allowed. Subject to, and this is also allowed subject to. Now what 43B says? Requirement of 43B is very simple. The contribution should be made on or before? On or before which due date? On or before which due date? Filing of ROI. Filing of only then it will be disallowed if it is not contributed on or before the due date of filing of ROI. Understanding, no? Now pay attention. This is your previous year 25, 26. Okay. So contributions for this year should be made in the assessment year 26, 27 on or before the due date of ROI. Okay, no? So ROI due date was 31st July 2026. So this year return should be filed on or before 31st July 2026. So if this year's contributions are made on or before 31st July 26, then this year's contribution will be allowed. But if this year's contributions are not made on or before the due date of filing ROI, on or before the due date of filing, then only 43B will be attracted. Then only 43B will be attracted. Now, to make these type of contributions, no, there is a law which tells you to contribute. PF law will tell you to contribute to RPF account. Yes or no? Then gratuity law is there, POGA, which will tell you to contribute to approved gratuity fund. Your contractual obligation will be there with the employee. As per the contractual obligation, there will be a date. As per the contractual obligation, you are supposed to contribute to approved superannuation fund. So, in the contract, in the law, also there will be a date. Law will tell you to contribute on or before this date. The contract will tell you that on or before this date. So there is one more date which will come in the picture now. That date is a statutory due date. Which due date? That is the due date as per the law or as per the contract to make such contribution. If you miss that due date, then actions will be taken against you under that law. If the PF law tells you to contribute on or before a particular date, and if you don't contribute on or before that date, then there is a contravention of PF law. Actions will be taken as per PF law. Gratuity law will tell you to contribute in gratuity fund on or before a particular date. If you don't follow that date, then actions will be taken against you as per the gratuity law. Understanding? So this is the due date for filing your return of income, no? On or this due date you should file the return of income. This is the due date as per the Income Tax Act to file your return. There is another due date. These contributions as per law should be made on or before the dates which are prescribed in that law. Those dates are known as statutory due dates. What will you call them? And statutory due date and return filing due date both are same, or both will be different? So for example, under the Payment of Gratuity Act or under the PF Act, the due date of making the contribution, it was given 15th of June. So this is, can I say, statutory due date. What is the statutory due date? 15th of June. So law says that as an employer you should contribute on or before 15th of June. So this year's contribution should be made on or before 15th of June. That is what law says. Now what if you make the contribution? Tell me, you have statutory due date. Wait, you have statutory due date. You have ROI due date. Okay. And this is the actual date of making the contribution. Okay, no? 3 due dates. What was the statutory due date? 15 June 2026. What is the ROI due date? 2000. Now, for example, you have contributed in May 26. This year's contribution is made before the ROI due date as well as it is made before the statutory due date in the month of May. 43B will be attracted or will not be attracted? Will this contribution be allowed or will not be allowed? Will be allowed. There is no disallowance. Why? Because this year's contribution is made well within time, before the statutory due date also and before the return filing due date also. Yes or no? So tell me, will there be any 43B which will be attracted? The answer is no. If 43B is not attracted, will the expense be allowed? 43B will be attracted or will not be attracted? Will not be attracted. Meaning the expense, meaning the contribution. Yes or no? Expense meaning the contribution will be allowed or will not be allowed? Will be allowed or will not be allowed? Will be allowed in the same previous year, because it is not disallowed as per 43B. Yes or no? First case understood, no? Should I make the second case? What is the statutory due date? What is the return filing due date? And you are making the contribution in Are you making contribution here? Here? Or here? August 2026. After the due date of filing ROI, after the statutory due date. Both the due dates are gone. You missed the statutory due date also and you missed the due date of ROI. After that you are making the contribution. 43B will be attracted or will not be attracted? Now 43B will be attracted and the expense will not be allowed. Not allowed in this year. Not allowed in previous year 25. But can you claim it in the next year? Because it was actually contributed in the next year. So it will be allowed out of the business income of the next year. But this year it will not be allowed. Understood? Two extremes we have seen. We have seen this side also, we have seen this side also. What if in between? The actual contribution was made on 20th of July 2026. Possible or not possible? Before the due date of ROI, but after the statutory due date. Did you understand my case? Have you made the contribution before the filing, before the due date of filing ROI? Yes. But you have missed the statutory due date. You have made the contribution after the due date of filing, after the statutory due date. 43B will be attracted or will not be attracted? 15th June 2026. 31st July 2026. Actual contribution made on 20th July 26. 43B will be attracted or will not be attracted? Will not be attracted. Why? Even if you have missed the statutory due date, but since you have made the contribution on or before the due date of filing ROI, it will be allowed as a deduction. 43B is attracted. The amount will be disallowed only if the contribution is not made up to the due date of filing ROI. Since you have made the contribution on or before the due date of filing ROI, so even if you have missed the statutory due date, will not make any difference. Still, it will be allowable under section 36(1)(4) and 36(1)(5). This is CBDT clarification. Because in some cases, what used to happen, the assessing officer used to disallow. Assessing officers, they used to invoke the provisions of 43B, and they used to disallow this contribution, saying that no, this contribution we are going to disallow as per 43B and claim it in the next year as a deduction because you have missed the statutory due date. But that assessee used to get harassed. He used to get into the problem. And 43B, and some assessing officers were allowing it. So now in the income tax department only, some assessing officers are allowing and some assessing officers are not allowing. So whether to disallow as per 43B or not, who will give the clarification? CBDT gave the clarification that 43B provisions gets attracted, expenses disallowed only if the payment is not done up to the due date of filing ROI. If the payment is done on or before the due date of filing ROI, even then the statutory due date is missed, disallowance will not be attracted. It will still be allowed. Yes or no? So disallowance will not be attracted and it will still be allowed as a deduction in this year only. This is what? This is CBDT circular. The third case which I have explained, no? This is your CBDT circular. Will you remember this? Sure. Perfect then. Read this part. Clause 3A we have done, no? Clause 3A we have done this part. Assessee is any person, he is making contribution to RPF ASAF of his employee, he is making contribution to approved gratuity fund of his employee, he is making contribution to NPS account of his employee. This will also be allowed, this will also be allowed, and this will also be allowed. This will be allowed subject to 43B. This is not allowed subject to 43B. This is allowed on actual basis, but the maximum up to the extent of 14% of employee's salary. Any excess contribution to NPS account of the employee will be disallowed as per 40A9. As per 40A9. Will you remember this? Sure, sir. Now see, what is the CBDT circular? I just explained this circular only to you right now. That for any previous year, if the contribution to RPF account or ASF account or the contribution to approved gratuity fund account. So for this year, if the contribution is made in this year or on or before the due date of filing ROI of this year, yes or no, then it will be allowed as a deduction in this year. So even if the statutory due date is missed, still 43B will not be attracted if the contributions are made on or before the due date of filing ROI. 43B will be attracted only if the statutory due date is also missed and the ROI due date is also missed. Until that day, the contributions are not made. Yes or no? Only then 43B will be attracted. This is what I have explained. And few examples I have already given like this. Okay. These examples I have already given. Next one. Now, what is this clause number 5A? This is very important. If you understand this thing now, a similar point I am going to discuss in IFOS also. Similar point I am going to discuss in IFOS also. That you will understand. Okay. Pay attention. Assessee is there? Can be any person, but this assessee is an employer. Now this employer gives what? Salary to the employee. Salary, X amount to the employee. But from this salary, he deducts some contributions. Employee's contribution will be deducted and net salary will be given to the employee. Do you remember that? So if provident fund contribution is there, then pension scheme contribution is there, different other staff welfare funds and schemes are there. So I call them staff welfare funds, staff welfare schemes, staff welfare funds or schemes, like provident fund is there, pension fund is there, gratuity fund is there, yes or no? So there are different types of staff welfare funds or schemes. Their employer will contribute, but employee himself will also have to contribute, no, for himself. So from where he will contribute? From his salary, which I am going to give him. So I am going to give him a salary. From that salary only, I will deduct his contribution. So I am deducting contributions of my employee to staff welfare fund or scheme. Some amount is deducted and the net amount is given to the employee. Net amount is given to the. Now don't you think the amount which I have deducted out of the salary of my employee, this is his contribution out of his income? Now the moment I have deducted, meaning, is this amount still with me? I am saying that I am giving a salary of 1 lakh, but am I actually giving 1 lakh? I am giving only 90,000, 10,000 is still with me. So 1 lakh going, out of that 10,000 deducted, 10,000 is still with me. So the amount which I am deducting out of the salary of my employee, amount which I am deducting out of the salary of my employee, that amount is still with me, no? That is equal to my income. The amount which I have deducted and still lying with me, this amount, which I have deducted and which is still lying with me, is my income taxable under the head PGBP. And later on, when I deposit this amount, in respective fund or scheme, at the time of making that deposit, it will be allowed as what? Deduction under section 36 subsection 1 clause 5. But the deposit to the staff welfare fund must be made on or before what? Due date of filing ROI? No. This is not subject to 43B. No. On or before the due date of that fund or scheme, meaning statutory due date. So first of all, amount which I will deduct will become my income, because that amount is still with me. That amount I have not given to my employee. So the amount which I have deducted out of the salary of my employee is my income. And if I want to take the deduction of this income, I will have to deposit this amount in the fund or scheme for which I have deducted. So the moment I will deposit, I will get the deduction. But deduction will be allowed subject to a condition that the amount must be deposited on or before the statutory due date. This is not allowed subject to 43B. That you deposit on or before the due date of filing ROI, then it will be allowed. If you don't deposit, it will not be allowed right now, but later on whenever you will deposit, at that time it will be allowed. No, nothing like that. No. Deposit on or before the due date of fund or scheme, only then it will be allowed. If the due date of fund or scheme is gone and you have not yet deposited, it will not be allowed as a deduction right now also and in future also. Once disallowed, permanently deserve. To claim this deduction, you have to deposit on or before the due date of the fund, due date of that scheme. Only then the amount which is considered as your income will be allowed as a deduction. Understanding? Now let's take example with numbers. Salary of the employee was 1 lakh. How much was his salary? How much you have deducted? 10,000. How much went to employee? How much went to employee? 90,000 is an income of the employee. How much salary employee will show taxable? And how much salary you will show as your expense? Somebody's income is somebody's expense. How much is the income of employee? So how much is your expense? So how much deduction for salary you are going to get under PGBP head? 1 lakh. But actual outflow is? Hence that 10,000 is treated as your income. Because the actual outflow was 90. But how much salary you are claiming as a deduction? So it should be 90 only, no? So 1 lakh deduction if you are claiming, then consider this 10,000 as your income. Claim the deduction of 1 lakh and show 10,000 taxable. Claim the deduction of 1 lakh and show 10,000 as your income. Net deduction of 90 only. But if you want to claim the deduction of this 10,000 also, deposit in the fund of the employee. On or before the due date of that fund, due date of the scheme, we are going to give the deduction of this 10,000 also. But if you are claiming the deduction of 1 lakh rupees of salary and from your pocket only 90,000 is going, that means 10,000 is still with you, no? First of all, that 10,000 is your income. So 1 lakh expense, 10,000 income, net 90,000 is only allowed. But if you want to claim this 10,000 also, deposit that 10,000 in the fund or scheme for which you have deducted. But you have to deposit on or before the statutory due date of that fund or scheme. This is not subject to 43B, huh? That, oh, right now you forget. Later on, whenever you will deposit that time deduction, no. If you miss the due date, statutory due date, this deduction will never be allowed. If you want to claim this amount as a deduction in this year, you have to deposit on or before the due date, statutory due date of that fund or scheme. It will be allowed as a deduction under clause 5A. Which clause? Will you remember this thing? Easy or difficult? Easy, no? Clause 5A. 5A is done. Now, there is one more clause, clause number 6. But that clause number 6 is not in your syllabus, but still I will tell you. Right now it is not in your syllabus. So you want to learn something extra? Then tell me, I'll explain. Do you remember animals can be used in the business? Animals. So any animals which are used in the business, how they can be used in the business? Animals can be used as stock in trade also, and animals can be used as stock in trade also, animals can be used otherwise also. Yes or no? How the animals can be used as stock in trade? My business is to buy and sell the animals. Like in poultry farming, I am buying and selling chickens. Hello? In my meat shop, fish shop, animals are my stock in trade. I have a pet shop where I am keeping different types of animals as pets. I am selling them as a pet animals. So in my business, the animals can be held as stock in trade. Can I hold animals in my business otherwise than as stock in trade? Yes. In my dairy business, I am having animals, but these animals are not my stock in trade because I am not buying and selling these animals. Yes or no? But these animals are still used in my business. So in my dairy business, if I'm using the animals, are these animals used as stock in trade or otherwise? Otherwise. So if I talk about animals held in as what? As stock in trade or otherwise. Okay, as stock in trade means pet shop, chicken shop, etc. Okay, no? And otherwise means dairy business, and one security business. Security business, I will have dogs, etc. Yes or no? So in my security business, I have sniffer dogs and all. So these dogs, these animals are used in my security business. But are they my stock in trade? No, I am not buying and selling the dogs. I am not in the business of buying and selling them. I am buying and selling something else. I am giving services. And for giving my services, security services, dogs can be used in my security service business. Done, no? Now tell me, will you feed the animal? Huh? Living beings, no? Would they require some food, care, maintenance, etc.? Even if they are held as stock in trade or otherwise, yes or no? Their regular maintenance expenses will be there, no? So, any regular, what did I say? Regular maintenance expenses like food, etc. Yes or no? This will be revenue expenses. This will be allowed under section 37(1), general deduction. Here also, in your business, if you are incurring regular maintenance expenses on them, this regular maintenance expenses is what? Revenue expense will be allowed as a deduction under section 37(1). Simple. So whether you are having them as stock in trade or not will not make any difference. Whatever expenses you are incurring to feed them, to maintain them, are all revenue in nature, will be allowed as a deduction because it is incurred in the course of your business or profession on the animals which are used for your business or profession. But to buy these animals also you will incur expense. Can I say purchase cost of these animals? So purchase cost of these animals and purchase cost of these animals, you have to identify that out of this purchase cost, which purchase cost is revenue and which purchase cost is capital. If in my business the animals are held as what? My stock is purchased and stock is sold. Stock is purchased and stock is, it will be done again and again. So can I say this purchase cost is also revenue in nature? Yes or no? And this will also be allowed under section 37(1). But what about the animals which are not held as stock in trade? In my dairy business, cows, buffaloes will be there. Do I buy them on a regular basis as my stock? Or once I will buy and they will give me milk for number of years. So the cost to purchase them will be incurred again and again or sometimes only. That cost to purchase them is not revenue, but it is, sir, any capital expenditure is an asset. But this capital expenditure is not an asset. I have already told you the definition of plant. does not include animals. So this capital expenditure cannot be claimed in the form of depreciation. Hence you can claim this capital expenditure separately under a section 36 subsection 1 clause 6. But this will not be allowed in the year in which the animal is purchased. It will be allowed in the year in which the animal retires from the business. So, animal was purchased in this year. Cows are purchased in this year. So, to buy a cow, you have spent 2 lakh rupees. Cows, buffaloes, yes or no? So, in your dairy business, you have bought buffalo. 10 buffaloes you have bought. How many buffaloes? Each buffalo costing 2 lakh rupees. How much you have spent? 20 lakhs. So 20 lakh is your capital expenditure. Will be allowed in this year only. No. Will be allowed under clause 6. But will not be allowed in this year. Will be allowed in that year in which the buffaloes will retire from your business. How they will retire? They will become useless. After 5-6 years, they have now stopped giving milk. They will retire from your business. Yes or no? Or they will retire if they die also. What if they fall ill and they die? Possible, no? Even animals can die. So whenever they will die in that year, or whenever they will go out of my business in that year, this amount will be allowed as a deduction. But wait. Out of this amount, in that year, you will recover some amount. Because even the dead bodies of the animals can be sold for their skin, etc. Yes, carcasses. The dead bodies are known as carcasses. And even the dead bodies of animals is of so much use. Their skin can be used. Their horns can be used. Their entire body parts are of so much use. So, to make some leather goods, to make some artistic items, their body parts can be used, their carcasses can be used. So, you have sold and you have got some money. Or for you, if the animal was alive, but for you it was not giving milk, so you sold that animal. Somebody took that animal from you. Hello? So, will that person give you some money? Out of the cost, that much recovery is done, no? Reduce, and the balance capital expenditure will be allowed in the year in which the animals retire from your business. This was your clause number 6. This was your clause number. Understanding? Right now, they have removed this part from your ICI study mat. So it is not there in your syllabus. But if something like this can be asked, remember this thing, okay? Now, let's go to clause number 7. 36, subsection 1, clause 7. Have you heard about bad debts? Bad debts are also allowed as a deduction. In your business, whatever bad debts happen, no? That bad debts will also be allowed as a, did I say provision for bad debts or I said bad debts? Bad debts are different and provisions are different things. What is bad debt? The debt becoming actually irrecoverable. The debt becoming actually irrecoverable is known as bad debt. That we are going to allow. But what if you have a doubt that it might become irrecoverable? So you don't write it off. You just create a provision, RDD, reserve for doubtful debts. Having a doubt and creating a reserve, that reserve we are not going to allow. Bloody, you have a doubt over the entire debt. Entire debt you will put in what? Reserve. We are going to give you the deduction for entire debt. No. You can claim only what? Actual bad debt and not reserves. Not reserves or provisions. Because they are just your imaginations. anticipations. You are anticipating that the debtor might not pay. What if he will pay? But you have claimed the deduction right now. Understanding or not? So till the time you don't know that actually they are not going to pay, till the time you have not written off your bad debt, we are not going to allow. But that bad debt has to be out of your income which is charged under the head PGBP. The income which was charged under the head PGBP, from that income if bad debt is there, only then we can allow you that bad debt. Now what I want to tell you, I will show you in a picture. Okay. See. Assessee is there. Who is this assessee? Tell me. Any person doing any business. Business or profession also, yes or no? So in your business or profession, will you do sales? How many types of sales you do? Two types of sales. Cash sales and credit sales. Cash sales, money is immediately received, no? Credit sales, after some time you will receive the money and that will become your debtor. So sales are of two types. One, cash sales, and second one is credit sales. So in the previous year, 25, 26, you have done a sales of rupees 10 lakhs. How much? Out of 10 lakh, 9 lakh is a and 1 lakh is a. Tell me, under the head PGBP, how much income will be taxable? How much income you will take as your business income? Because sales is your business income, yes or no? So how much sales you will show as your business income in this year? Why 10 lakhs? Only if you follow mercantile system of accounting. This year's sales, whether received or receivable, will be shown as income in this year. So if you are an assessee, following mercantile system of accounting, then under the head PGBP, even this 9 lakh will be taxable and even this 1 lakh will be taxable. Yes or no? Now 1 lakh was your credit sales. 1 lakh was your. Have you shown this 1 lakh as your income under the head PGBP? Out of this 1 lakh, the bad debt will be created. Because when you record this sales in your books, what entry you would have passed? Debtor account debit to sales 1 lakh. Sales you have shown in PGBP and debtors are appearing in your balance sheet. In the balance sheet, bloody whatever debtors are appearing was nothing but your income, which you have already shown, taxable. Debtors are against sales, and sales you have already shown as your income. This sale, sir, this sale already taken as your income under the head PGBP. Against this sale only, debtors of 1 lakh will be standing in your balance sheet. Now from these debtors, actual bad debt will happen. That actual bad debt will be allowed under the head PGBP under section 36(1)(7), because the bad debt is out of a debt which you have already taken as your income under the head PGBP. So bad debt must be out of a debt. Bad debt must be out of a debt which you have already taken as your business income. Only then that bad debt will be allowed as a deduction. Only condition is you have to write off in your books of accounts. That's it. Just write it off against your debtors and claim it as a deduction. But no deduction for reserves or provision for this bad debt will be allowed. Will you remember this? Sure. Pakka no? One more example I am giving you. Now, assessee has a business of, assessee is in the business of lending money or banking business. Possible, not possible? Can you have lending business? Can you have banking business? What is your main business? Come on, tell me. Lending money and earning interest. Why do you lend money? To earn interest. So earning interest is your interest earned will be your business income only, no? To earn that type of interest only, it is your business. Lending money is your business, meaning your intention is to earn what business income? Interest income. So in your lending business, whatever interest will come will be your business income. And in banking business, whatever interest will come will be business income, because banks have the same business, taking the deposits, giving the loans and advances, on that earning interest. So in the lending or banking business, first thing will be loans or advances given to whom? Borrowers. Yes or no? And from these borrowers, the assessee is getting what? Interest. Yes or no? That interest is received or it is receivable. Will be taxable as your which income? Which income? PGBP income. Whatever interest for previous year 25-26 will be there, will be taken as PGBP income for 25-26. Whether the interest is received or it is receivable, will be taken as my PGBP income. But the assessee for that is following mercantile system of accounting. So if mercantile system of accounting is followed, this year's business income received in this year's business income receivable in this year will be taxable in this year under the head PGBP. See, the interest which is received cannot become a bad debt. But the interest which is still receivable and have already shown under the head PGBP, can it become bad debt? Can it become a bad debt? The interest which was receivable, now the borrower is not ready to pay me that interest. He has defaulted in the payment of this interest. Hello? Or I might have a doubt also that he might not pay. So will I create RDD also? And see, for the assessees like me, creating this RDD will be mandatory as per the RBI requirement. RBI puts a statutory obligation on the assessees engaged in lending or banking business to create what? Provisions for bad and doubtful debts. RBI norms are there for some assets which are non-performing assets, create this much RDD. Non-performing for this period, create this much RDD. Non-performing for more than this period, create this much RDD. Yes or no? So as per the RBI norms, we have to create RDD. RDD is not created according to our wish. Tell RBI to stop telling us to create RDD. We will not create RDD. But RDD is created as per the norms of RBI. Even this RDD is allowed. Bad debt is definitely allowed, but RDD is also allowed. RDD means reserve for bad and doubtful debts. But this is allowed under section 36 subsection 1 clause 7A. And this bad debt will be allowed under section 36 subsection 1 clause 7. This bad debt is actual bad debt out of the business income. This bad debt is actual bad debt out of business income. The income which has already been taxed under the head PGBP, from that income, whatever actual bad debt is happening, that bad debt is allowed under section 36(1)(7) to all. So to these assessees also it will be allowed. But these assessees will additionally get a deduction of RDD also. But that RDD, how much deduction is given, what are the conditions, everything you are going to learn in CA final. Right now just remember, they also get the they get the deduction for RDD also. But other assessees will never get the deduction for RDD. RDD is not allowed for them. But RDD will be allowed to the assessees engaged in banking or lending business. So apart from the actual bad debt, which is allowed under clause 7, they are going to get the deduction for RDD also under clause 7A. How much? Based on what conditions? None of your business. That you are going to learn in final CA. Yes or no? Now wait. This RDD is not created only for this income. RDD is created for this loan or advance becoming non-performing, NPA for some time. Now see what happens, no? The loans or advance which is given to the borrower, and some borrower becomes Mr. Vijay Mallya. You know who is Mr. Vijay Mallya? Owner of Kingfisher. Once upon a time, member of parliament also. He took huge amount of loans from banks, different banks, nationalized banks. And without paying the, forget about the interest on that loan, forget about the interest. Bloody he did not pay the principal amount, he did not pay the loan which was given to him. So can there be a borrower who defaults in payment of loan? Principal amount only he has not paid. What if this loan or advance given to the borrower, if this becomes irrecoverable? This will also be allowed as what? Bad debt under clause 7. Because the nature of your business is to give loans and advances. In your business, whatever loans and advances are given in the course of your business, your nature of business is to grant such loans and advances. So in your business, whenever the loans and advances are given by you, and if they will also become irrecoverable, they will also be allowed as a deduction, as bad debt. And any RDD is created for them, that RDD is also allowed, because it will be created as per statutory norms of RBI. Yes or no? But wait. Can this assessee give any loans or advances? I'm in a manufacturing business. Can I give loans or advances? Yes. But my business is not to give loans or advances. Now the loans or advances becoming what? Irrecoverable for me. Then can I claim that as a bad debt? For me, my business was not to give loans and advances. So if I have given some loans or advances and they become irrecoverable, they will not be allowed as deduction as bad debt. But they will still be allowed as a deduction as loss in the course of my business or profession. But not as bad debt. For me, it will not be treated as my bad debt because my business was not to give loans or advances. For example, my business is manufacturing of shoes. A manufacturer of shoes. So in my manufacturing business, there was a supplier from whom I was taking the raw material for my shoes. And to that supplier, I have given advance of 10 lakh rupees. Possible or not? Have I given the advance in the course of my business? But giving the loans and advance is not my business. Now can this advance become irrecoverable? Yes. That supplier ran away with my 10 lakh rupees. He became insolvent. He did not deliver the goods to me. That 10 lakh rupees advance forfeited by him. Isn't it a bad debt for me? No. My business is not to give such loans or advances, so this cannot be treated as my bad debt. But since it was given in the course of my business and I lost it, it is a loss incurred in the course of my business. I can still claim it as a deduction out of my business income, but not as bad debt, but as loss in the course of my business or profession. Understood? Sure. So now, see this part. Here, assessee was in the business of giving loans and advances. My business is lending business. My business is banking business. So in this business, whatever loan advance I am giving, my business is to give this loan or advance only. And in the regular course of my business, whatever loans or advances I am giving, if they become irrecoverable, then they will be allowed as a deduction in the form of bad debt. That is not a loss in the course of my business. That is bad debt only. Claim it in the form of bad debt. And on that loan advances, whatever interest which was receivable, which I have already shown taxable under the head PGBP. Yes or no? This interest. If they become bad debt, then also I will be eligible to claim that bad debt, because bad debt is happening out of my income which I have already shown as my PGBP income. Remember, if you want to claim bad debt as a deduction, first and foremost condition is that bad debt should be created out of a debt which I have already shown as business income. First you show that amount as your income, and now that income was due to be received as a debt, and if that debt becomes bad, actually irrecoverable, then only it will be considered as a bad debt, which we are going to allow you as a deduction. Understanding? So in your business or profession, some income was there, which you have already taxed. On what basis? Due basis. That amount was shown as a debt owed to you. Debt owed to you means as a debtor. And out of that debt, if some amount is irrecoverable, only then it will be treated as a bad debt. Which is happening, see, here also, and which is happening here also. Understood? But RDD cannot be taken as a deduction. However, your business was lending or banking business, then RDD can also be taken as a deduction. Also, the loans or advances which you have given in the course of your business or profession, if they also become irrecoverable, they will also be allowed in the form of bad debt. Understood? What if the loan is given in the course of normal business? Will it be treated as bad debt if they become irrecoverable? No. Can you take the deduction? Yes, but not as bad debt, as a loss incurred in the course of business or profession. Will you remember? Now tell me, how much was your debtors here? Credit sales? 1 lakh. So debtor was 1 lakh. Full 1 lakh becoming bad debt. So what? 10 lakh is taxed, no? In that 10 lakh PGBP income, 1 lakh business income, which was your debtors. Are you receiving it or becoming bad debt? So out of 10 lakh income, take the deduction of 1 lakh as bad debt. Go. How much should be taxed? Only 9 lakh. Because out of 10 lakh, if 1 lakh is becoming bad debt, 1 lakh should not be taxed. So take the deduction of 1 lakh. So first you show 10 lakh as your income, and then out of that 10 lakh, take a deduction of 1 lakh because it is bad debt. How much is taxed? 9 lakh. Meaning that 1 lakh rupees was shown as your income. And then later on, it was allowed as a deduction. Why it was allowed as a deduction? Because it became bad debt. Now tell me, later on, can you recover this 1 lakh? Bad debt recovery can happen. Then at that time, it will be taxable as your deemed PGBP income. First 1 lakh will be your income. Hello? First 1 lakh was your income. Then 1 lakh irrecoverable, meaning bad debt. So 1 lakh was allowed as a deduction. So first 1 lakh was taken as your income, then that 1 lakh was reduced. 1 lakh is not taken as your income. Taken as your income, then allowed as a deduction. Taken as an income, then allowed as a... And now the amount for which the deduction was availed, that bad debt, is later on recovered. Shouldn't it be taxed? So tax it as deemed PGBP income. Common sense. Which is very uncommon. The bad debt recovery will be taxable as your business income. Yes or no? Only if it is out of that bad debt which was allowed as a deduction. If the bad debt was allowed as a deduction, out of this bad debt, later on whatever recovery is happening, no, only that will be treated as your deemed PGBP income. If the bad debt was not allowed as a deduction, meaning this is already taxed, and now out of this bad debt if the recovery is done, again don't charge it as your deemed PGBP income. So bad debt recovery will be taxable as deemed PGBP income. In the year of recovery, it will be taxable as deemed PGBP income only if it is out of that bad debt which was allowed as a deduction earlier. But if the bad debt is recovered out of that bad debt, the recovery is of that bad debt which was not allowed earlier as a deduction, then it will not be taxable as deemed PGBP income. Will you remember this? This is the end of bad debt. This is the end of. Let's see what this section says. Please read this part. Tell me, are you understanding anything or not? If not understanding, then also you can tell me. Assessee, doing any business or in that business or profession, sales is done. Some cash sales already shown as business income. Some credit sales of this year is already shown as business income. Why? Because the assessee is following mercantile system. So this year's entire income has to be shown taxable under the head PGBP. So this year's cash sales also PGBP income. This year's credit sale also PGBP income. So credit sales which you have considered as your PGBP income was converted into debtors, no? And out of this debtors, actual bad debt is happening, will be allowed as a deduction provided they are written off in the books. And out of this debtor, if you are creating any provision for bad and doubtful debts, reserve for doubtful debt, which will be disallowed because this is not your real loss, real expense. It is just an expectation, anticipation of loss. For this we are not going to allow you any deduction. Yes or no? Okay. Now see, now if you are in the business of banking or money lending, so in your business, whatever loans or advances you are giving, if the loans and advances becoming irrecoverable, then also it will be treated as bad debt. And on those loans and advances, whatever interest you are earning, which you have already shown taxable under the head PGBP, out of that interest, some interest was receivable, then also it was taxed under the head PGBP. Why? Because you are also following mercantile system. So if you follow mercantile system, what happens? The interest which was receivable was also taxed as your PGBP income. Out of this interest receivable, out of this PGBP income, if some income becomes actual bad debt, it will be allowed as a deduction. And sometimes RDD and provision for bad and doubtful debts, which they will create for this also, and for this loans and advances, as well as for this interest which was recoverable, the RDD or provision for doubtful debt will be created, will be allowed to them under section clause 7A. Unlike other assessee, they will not be denied deduction. They will be getting the deduction for provision for bad and doubtful debts, but under different clause that you learn in CA final. Okay. Now, any assessee who is not in the business of giving loans or advances, if in the course of his business or profession he has given some advance to someone, and if that advance is becoming irrecoverable, that will not be treated as bad debt, but it is a business loss, it is still allowed. I've already covered all these things. Okay. Now, next one, bad debt which was already allowed as a deduction. Out of that bad debt, later on some bad debt is recovered. The entire bad debt will be, either the entire bad debt will be recovered or some part of this bad debt will be recovered. Whatever recovery is made out of that bad debt which was allowed earlier, no, that will be deemed to be your PGBP income. If the bad debt were allowed as a deduction, no, earlier the bad debts were not allowed as a deduction. If this bad debt or any part is later on recovered, will be ignored, will again not be taxable as deemed PGBP income, because it was already taxed earlier as your income. From there it was not allowed as a deduction. So no need to charge it again as deemed PGBP income. If you do it, it will be taxed for the second time. Understood? Now, bad debt recovery will be your PGBP income. Hello? This year, some bad debt you are recovering. Will it be your PGBP income for this year? Yes. If this recovery in this year is out of those bad debts which were earlier allowed as a deduction. So in some earlier year, the bad debts were allowed as a deduction, and out of that bad debt which was allowed as a deduction, now in this year the recovery is made. This year that recovery will be taxable as your deemed PGBP income, even if this bad debt is recovered for a business which is no more in existence. So the business which is no more in existence in this year, for that business the recovery is done in this year. Will it make any difference? No. It is not required that the year in which the bad debts are recovered, in that same year, in the year of recovery, the business should also be in existence. It is not required. It is not required for any of the deemed PGBP income. So whenever you will charge any income under the head PGBP as deemed PGBP income, under section 41, it is not required that the year in which you are charging that income as deemed PGBP income, in that year the business should also be in existence to which that income relates. Even if business is not in existence, even if the activities of that business are not in existence in that year, still the income of that business will be taxable in the year of recovery as deemed PGBP income. Understanding? Do you remember that scientific research? Capital expenditure was incurred. That capital expenditure was allowed earlier. And if that asset which was purchased for scientific research is sold, later on any recovery is made for that asset, that recovery is taxable as your deemed PGBP income. Even if the business to which such recovery relates is not in existence, in the year of recovery it will be taxable as deemed PGBP income. The reason for calling these income is deemed is that only, that there is a requirement of section 28 that if you want to charge any income under the head PGBP, the assessee must carry on business or profession during the previous year. At any time during the previous year, the business or profession must be carried on. Only then the income of that activity will be chargeable under the head PGBP. But in the case of deemed PGBP income, this is not a requirement. Even if this is an exception, all the deemed PGBP incomes are exception. Even if during the previous year activities of that business are not carried on even for a single day, still this income will be taxable under the head PGBP. Bad debt recovery will be taxable as PGBP. Even if the activity of that business was not carried on during that year, still the bad debt of that business will be taxable in this year. Understanding? So, even if the business or profession is not in existence in the previous year in which bad debt is recovered, still that bad debt will be taxable as deemed PGBP income. And they test you for this point. One small adjustment they will give. The bad debt recovered in the P&L credit side, they will write bad debt recovered for automobile business. So right now you are into chemical business, but this year the bad debt which you are recovering is for automobile business. In the adjustment they will give the bad debt recovered and credited in the P&L account is with respect to an automobile business which is no more in existence during the previous year. So what? Even if the automobile business is no more in existence during the previous year, their bad debt recovery will still be taxable in this year. As per section 41, there is no requirement that the business should also be in existence in the year of bad debt recovery. Will you remember this? This was your clause number 7. Bad debt recover. Now clause number 9. Whatever I will speak, just remember that only. No need to get into details of this section, okay? Are you an assessee? Are you an assessee? You are a company. So this deduction is not available to all assessees. This deduction is available only to the companies. So are you a company? And you have incurred any expenditure to promote family planning amongst your employees. So the company is promoting what? Family planning amongst its employee. So to promote this family planning, some expenditure is incurred by the company. So whatever expenditure which the company will incur to promote the family planning amongst its employee, even that expenditure will be allowed as a deduction. That is given in clause number 9. Even if the expenditure is revenue in nature or capital in nature, even the capital expenditure will also be allowed. If any asset is acquired to promote family planning, if an asset is acquired to promote family planning amongst my employees, the cost of that asset also can be allowed. But it will be allowed in 5. It will be allowed in 5 equal annual installments. Capital expenditure, revenue expenditure can be fully allowed, but capital expenditure will be allowed in 5 equal annual installments. So capital expenditure on family planning, 1/5, 1/5. Revenue expenditure to promote family planning, fully. But this deduction will be available only to the company. Now tell me, capital expenditure allowed or not allowed? Allowed. But fully allowed or 1/5 allowed? Proviso to section 43(1) will be applicable. Do you remember? 10,000 or more than 10,000 paid in a day to a person other than prescribed modes will not be treated as actual cost, will not be treated as your capital expenditure. So for that you are not going to take any deduction under this section also. That much actual cost of the asset will be ignored, which you have paid in a day other than prescribed modes. And if the amount was more than 10,000, so that much actual cost will be ignored. That proviso to 43(1) will be applicable here also. And the capital expenditure which you are claiming here cannot be claimed in the form of depreciation, cannot be allowed under other sections also. Understanding or not? Sure, sir. Now, one very important discussion, pay attention. See, day before yesterday, no, yesterday only I explained something to you. Unabsorbed depreciation I had explained, if you remember. What did I explain? Unabsorbed depreciation. Do you remember that concept of unabsorbed depreciation? How do I calculate that unabsorbed depreciation? First of all, we take our business income. Hello? What was my business income? In my example, 10 lakh was my business income. Out of that business income, what I will reduce? Business expenses I will reduce. How much was my business expense? 8 lakhs. So how much was the balance? 2 lakhs. Meaning the business is giving me a profit or business is giving me a loss? Business is giving me a profit. Profit of? Business is giving me a profit of? Now out of this 2 lakh, I will take the deduction of depreciation. Depreciation is not my expense. I cannot claim depreciation as business expense. I will have to claim separately. In short, if some assets are used in my business in the normal operations, the cost of that asset will be allowed in the form of depreciation. What if that asset is used in my business in scientific research? Cost of that asset will also be allowed. But that cost cannot be allowed as business expense. That will also be separately allowed, but after depreciation. So depreciation on all the assets which are used in the normal operations, but entire capital expenditure of those assets which are used for scientific research, and 1/5 of the capital expenditure of those assets which are in my business to promote family planning amongst employees. So all the capital expenditures of the assets used in my business are separately allowed as a deduction. Some capital expenditure will be allowed in small part in the form of depreciation. Some capital expenditure will be allowed fully because that capital expenditure was on the assets used for scientific research. Some capital expenditure will be allowed 1/5 because that capital expenditure was on the assets for promoting family planning. But first, what will you claim? First, which capital expenditure you will claim? That capital expenditure which is allowed in the form of depreciation under section 32. Then claim that capital expenditure which is on those assets which are used for scientific research. Then claim that capital expenditure, 1/5 of that capital expenditure which is on those assets used for family planning. In this sequence you are supposed to reduce. So first, what are you going to reduce from here? Under section 32. Then if the profits remains, then section 35, capital expenditure on scientific, capital expenditure only I said. What about the revenue expenditure on scientific research? Revenue expenditure on scientific research already covered here. Donations for scientific research, statistical research already covered here. Understanding? Revenue expenditure on family planning already covered here. All the capital expenditure are to be reduced now. Understanding? So first of all, what are you going to reduce? Depreciation on all the assets in the business used in the normal operations. So cost of those assets allowed in small parts in the form of depreciation. Under which section? 32. Then if some profits remain, then capital expenditure, meaning cost of all those assets which are used in the business in scientific research. Capital expenditure under section 35. Okay. Then if some profits remain, then less. 1/5 of capital expenditure on family planning, which is allowed under section 36 subsection 1 clause 9. And if you will see, you have to reduce in sequence. First 32 will come, then 35 will come, and then 3619 will come. You cannot interchange. Sir, first I will claim this 1/5, then I will claim depreciation, last I will claim scientific research. No. You have to come in this sequence only. Understanding? Now say, wait, guys, pay attention. If my depreciation was 1 lakh, will there be profit remaining? How much? Then from that 1 lakh, what I will reduce? Capital expenditure on scientific research. 1,50,000. Now the profit will remain negative 50,000. Will it be your business loss? No. This will be unabsorbed capital expenditure on scientific research. Still you cannot call it business loss. Your business is not giving you a loss. Business is giving you a profit of 1 lakh after claiming depreciation. And that 1 lakh was not sufficient to absorb 1,50,000. So first of all, let's say that the depreciation was 2,50,000. Depreciation was 2 lakh. So here negative amount will come. What will you call? Business loss or unabsorbed depreciation? So here unabsorbed depreciation can come. Here unabsorbed depreciation can come. What are you going to do? 32, 2. I have already explained. This. What are you going to do with unabsorbed depreciation? You can adjust it against any income of this year except salary. If not adjustable, then carry forward in the subsequent year against any income except salary. And you can carry forward for indefinite period. Yes or no? What if the depreciation was only 1 lakh? Possible or not possible? So will there be profit or loss? Profit of 1 lakh. Now there is no unabsorbed depreciation. Yes or no? Now tell me, if out of this 1 lakh, 1,20,000 was the cost of those assets which were purchased in this year for scientific research. So now out of this 1 lakh, I will take that 1,20,000. Negative. Will you call this business loss? This is unabsorbed capital expenditure on scientific research. How will you treat this? Same treatment which you give to unabsorbed depreciation. Against any income except salary. If not there, then carry forward. Hello? And after carry forward, against any income except salary. And carry forward for indefinite period. So just like unabsorbed depreciation is adjusted, you have to adjust the unabsorbed capital expenditure on scientific research. Will you remember this? Now tell me, if capital expenditure on scientific research was only 60,000, only, so will there be a profit of 40,000? So is there any unabsorbed capital expenditure on scientific research? No, still you have a profit of 40,000 now. Now out of this profit, you have to reduce 1/5 of family planning expense. Family planning capital expenditure was 4 lakhs. How much? Will it be fully allowed or only 1/5? So take 1/5 of that. So if you will reduce 80,000 from here, positive amount will remain or negative amount? Will you call this business loss? This is unabsorbed capital expenditure on family planning. This is not a loss. Sorry, this is not a business loss. This is unabsorbed capital expenditure. Bloody, your business is giving you a profit of 40,000 this year. How can you say that you have a business loss? You don't have any business loss. You have a business profit of 40. But this year, your amount is negative because sorry, this will be negative 40, no? Negative 40. My mistake. Negative 40. So this year, negative 40 is not your business loss. This year, business profit is 40 there, 40 profit is there. That 40 profit is not enough to adjust this capital expenditure. So some capital expenditure still remains unabsorbed. That is unabsorbed capital expenditure on family planning. Same treatment which you give to unabsorbed depreciation can be given to unabsorbed capital expenditure on scientific research, can be given to the same treatment can be given to unabsorbed capital expenditure on family planning also. Will you remember this? Done, sir? Okay. Now pay attention. Clause number 15 and clause number 16. Two clauses. How many clauses? Two clauses. 15 and 16. To understand these two clauses, pay attention. Are you an assessee? Yes, yes, yes. No, no, no. Yes or no? Assessee, you are any person. Now you are doing transactions of buying and selling. Buying and selling of shares, securities, yes or no, on recognized stock exchange. So you are buying and selling the shares and securities. Where? On recognized stock exchange. So whenever you will buy, what did I say? Whenever you will buy on recognized stock exchange. Whenever you will sell on recognized stock exchange. So at the time of buying also, at the time of selling also on recognized stock exchange, you have to pay STT. What you are supposed to pay? STT is securities transaction tax. So this securities transaction tax will also be allowed. As deduction under the head PGBP under section 36 subsection 1 clause 15 if this buying and selling transaction results into PGBP income. Transaction of buying the shares and securities and selling the shares on securities, these transactions is resulting into PGBP income. Normal PGBP income or speculation PGBP income. Can be any PGBP income. So I am a share trader. I am taking the shares as my stock in trade, selling the shares as my stock in trade. The buying and selling transaction will result into my normal PGBP income of share trading business. On these buying and selling transaction, whatever STT I will pay, I will get the deduction out of the PGBP income of these transactions. Yes or no? Can I do the speculation in shares? Yes. Buying the shares, selling the shares. Buying the shares and securities, selling the shares and securities without taking the delivery. But still this buying and selling transaction is resulting into PGBP income, speculative business income. Yes or no? Out of that business income, I can very well claim the deduction for this STT. But the buying and selling transaction must result into PGBP income. Sometimes the transaction of buying and selling results into capital gains. Because the shares and securities are bought as investment, as capital asset. So you are buying as capital asset and you will be selling as capital asset. So buying and selling transaction will result into which income? Capital gain. So this STT will go to capital gain. But under the head capital gain, it is not allowed as a deduction. But if this buying and selling transaction results into PGBP income, yes or no? Then whatever STT you have paid on these buying and selling transaction will be allowed as a deduction out of the PGBP income of this transaction. Done, sir? Sure, sir? Can you buy and sell? Can you buy and sell commodities? Tell me, instead of shares and securities, can you buy and sell commodities? And now you buy and sell the commodities on recognized commodities exchange. Recognized stock exchange? No. To buy and sell the commodities, there is a different exchange known as commodities exchange, MCX. You might have heard about multi-commodity exchange, MCX. Like stock exchanges are there, NSE, BSE, yes or no? National Stock Exchange, Bombay Stock Exchange. That is a stock exchange where the shares and securities are bought and sold. So if I want to buy and sell commodities, if I want to buy and sell, so there is a separate market for that. And that market is not NSE, that is not BSE. I have to buy and sell the commodities on different market. That is known as MCX, Multi Commodities Exchange. It is a recognized commodities exchange. So if I buy and sell what? Commodities on recognized commodities exchange, I will pay CTT, Commodities Transaction Tax. Even that commodities transaction tax is allowed as deduction under the head PGBP under section 36 subsection 1 clause 16, provided the buying and selling transaction of commodities results into PGBP income. So if the commodities transactions of buying and selling is resulting into PGBP income, then out of that PGBP income, whatever CTT, commodities transaction tax, you have paid on the buying and selling transaction, you can claim it as a deduction. Clause number 15 done, clause number 16 done. Actual payment basis, these things will be allowed, because it is a tax paid in the course of business or profession. So actual payment basis, this will be allowed. Done, sir? Should I move ahead? Yes or no? Section 36 done. Now only one deduction remaining. And which is that deduction? 37. And the moment the deduction will be over, no, understand, almost this entire chapter is over. Only then disallowances, few disallowances we have to keep in mind, and immediately we will start solving the questions. Okay. Now see. 37 subsection 1. Last deduction. See, are you necessarily doing a business or profession? So in your business or profession, can you do other expenses also, which are not covered from 30 to 36(1)? Because 30 to 36(1), specific items of expenses are covered. Other than these items also, other expenses might also be incurred in the business or profession. Give me some examples. What if you pay salary to your employees? Salary. Salary is allowed as a deduction. Yes or no? Under which section? 30, 31, 32, then 35, 35AD, 36 subsection 1. Any clause? No. But salary is a business expense which I am paying to my employees. Should be allowed or should not be allowed? So claim it as a deduction. General deduction is there. So any expenditure, what did I say? Which is revenue in nature. I am talking about only revenue expenditures. Which expenditures? Any expenditure which is not a capital expenditure, meaning revenue expenditure. Yes or no? Which is wholly and exclusively incurred for the purpose of my business or profession. This expenditure is incurred. Please stop doing that now. Which is wholly and exclusively incurred for the purpose of my business or profession means I am doing this expenditure only because I am doing this business or profession. If I would not have been doing this business or profession, this expense was not incurred only. Or if I am incurring this expense, only then I am able to do the business or profession. So to do my business or profession, incurring this expenditure was necessary. So meaning the expenditure is wholly and exclusively incurred for the purpose of my business or profession. Expenditure should not be capital in nature, number one. Wholly and exclusively incurred to for the purpose of my business or profession. And this expenditure should not be should not have been allowed, should not be covered by provisions of 30 to 36(1). It was not covered in those sections. Then come, we are going to allow you that expenditure also 37(1), because that expenditure was wholly and exclusively incurred for business or profession. Hello, it was not capital expenditure and it was not specifically allowed under section 32, 36(1). So you can claim that expenditure also as a deduction. That is what your section 37(1) says. Now any damn expenditure applies some logic. You will come to know that whether this expenditure is necessary for business or not. Whether it is capital in nature or not. Wholly and exclusively incurred, not capital. And you just have to remember, this was not covered in section 32, 36(1). You can very well claim that expenditure by taking the benefit of this section. General deduction. Understanding? Sure. So few examples. Wages and salary, okay. Then electricity, very good. Carriage means transportation and freight, okay. Then purchase of my stock in trade, very good. Then purchase of raw material, purchase of goods for trading, purchase of my stock in trade, purchase of raw material. Then commission which I am paying, very good. Advertisement expenses, yes. Any expense which you incur for the purpose of business or profession, wholly and exclusively, not capital in nature, not covered by section 32, 36(1), will be allowed under 37(1). This is a general deduction. Rent of plant and machinery used for your business or profession. Rent of furniture used for the purpose of your business or profession can be claimed under 37(1). Understanding or not? 37(1) will allow you the deduction for expenditures. What? Again say expenditures which are wholly and exclusively incurred. 37(1) does not give you any deduction for losses. But still the losses are allowed as a deduction. Why? To claim the losses, section is not required. Common sense is required. Bloody, you cannot determine the profit of the business without adjusting the losses incurred in that business. So to adjust the losses, there is no specific provision required. And by mistake, if you will say that losses are allowed under section 37(1), gone. The losses incurred in the course of business or profession are not allowed under section 37(1). 37(1) specifically talks about expenses, expenditures. So salary expenditure, the expenditure on advertisement, expenditure for commission, discounts given, okay, no? Any expenditure on your employees' welfare, all the expenditures which are happening in the business, only the expenditures are allowed under 37(1). But what about the losses incurred in the course of business or profession? Your employee stole the money and ran away. Is it an expenditure or it is a loss? Will be still allowed as a deduction, even if not under 37(1). Still it will be allowed. No specific section for taking this deduction, still it will be allowed. But it cannot be claimed under 37(1) because it is not an expenditure. Stock lost by fire. Is it an expenditure or a loss? Still it will be allowed as a deduction. No specific section, but not under 37(1) also. Still it will be allowed as a deduction. So why are you claiming it as a deduction? To claim the losses as a deduction out of my business income, there is no section, no provision required. Only common sense is required. Charge is on profits. And bloody, how will I derive my correct profits if I will not adjust my losses? So derive the profits. By default, the losses are automatically adjusted. For that, adjusting the losses, there is no requirement of any specific section or deduction under 37(1). And by the way, 37(1) is not allowed for losses, it is allowed only for expenses. Understanding? So ask any of your friends that losses incurred in the course of business or profession are allowed or not allowed. They will say allowed. Just ask them which section. They will say 37(1). What are you going to do? Laugh and walk away. Don't tell them the question, correct answer. 37(1). Majority, almost all your friends will say 37(1). Why? Because if nothing is covered, if the expenses is not covered under any other section, it will be covered by 37(1). So you cover, no problem. But I will not cover under 37(1) because I know 37(1) covers only expenses and not losses. Still the losses are allowed. Because adjustment of losses does not require any provision, does not require any specific deduction. It automatically happens because the charge is on profits of the business and you cannot derive the profits until and unless you adjust the losses. Hence the losses automatically gets adjusted without even having any specific provision. Understood? Will you remember this? Sure, no? Okay, perfect. Now see, 37(1) has 3 small explanations. How many explanations? 3. 37(1). Read this entire part. I have explained this thing now. Any, not personal, not capital in nature, wholly and exclusively incurred for business or profession, not covered by 32, 36(1), all those expenses will be allowed as a deduction from your business income that is given in 37(1). Okay. Now first explanation to section 37(1) says that these type of expenses will be considered as if they are not incurred for business or profession. Any illegal expense which you have incurred, any illegal expense will be assumed as if they are not incurred for your business or profession, meaning you cannot take the deduction for illegal expenses. Even though all the conditions of 37(1) are satisfied, because in the case of certain expenses, the expenses are illegal. In the case of those expenses, all the conditions will satisfy. So you will come and you will claim the deduction for illegal expenses also, saying that, see, all the conditions are getting satisfied, give me the deduction. At that time, we will apply explanation number 1 and we will tell you that this illegal expense is assumed as if it is not incurred for business or profession, and accordingly no deduction for this will be allowed. 37(1) benefit cannot be taken to claim deduction for illegal expenses. Now what is the meaning of illegal expense? The expense which you have incurred is legally not allowed to be done by you. For example, I am a government contractor, I take government contracts, road contract, construction contracts, from government departments I am getting all these contracts. So my business is taking contracts, doing construction, yes or no? So my business is to do construction contracts. So from these construction contracts I am earning business income, but these construction contracts are given to me by the government departments. The government departments will give me the contracts only if I will bribe the government officers. Sir, I will close the file, put some money in the file. Sir, please pass my contract. Please sign my contract. The officer will open take the bribe and sign the contract, sign the project, and that project is given to me. Am I giving bribes? Is that bribe given for my personal benefit? No. That bribe was given for the benefit of my business. So that in my business, the contracts are keep on coming to me. Yes or no? So to get those contracts from the government in my business, I have to pay the bribes. Expenses wholly and exclusively incurred for the purpose of my business or profession. And I am not giving it only once, I am giving it again and again, not capital in nature, revenue in nature. And section 30 to 36(1) nowhere covered. All the conditions of section 37(1) are satisfied. I will claim the deduction. I will go and claim the deduction. But will they allow? They will apply explanation number 1. They will say giving bribes is illegal expense. And we will assume as if this expenditure was not incurred for the purpose of your business or profession. Accordingly, you are not going to get any deduction for that illegal expense. Illegal expense. Deduction cannot be claimed under the head PGBP. Just imagine if you start getting the deduction for these illegal expense. Everyone will start doing illegal activities. So this will promote illegal activities. I have a cinema hall. Example, what is my business? Running a cinema hall. So in my cinema hall, no, many people will come to watch movies. Yes or no? But outside my cinema hall, no, few rowdy people are always standing. Like you know, na, those goons, those gunda mawalis and all. Okay, what do you call them? Rowdy people. Okay, no, they're always standing outside my cinema hall, and they will create some or the other nonsense. The people who are coming to see the movies, they will try to harass those people. They will try to fight with them. Okay, no, and as a result of that, no, it is affecting my business. Now good people are not coming to my cinema hall. Okay, families are not coming. So ultimately my reputation of my cinema hall, my business is going down, and it is affecting my business. So that entire gang which is outside my cinema hall, gang leader, I am calling the gang leader once and I am saying, Anna, please, you are doing all such activities outside my business premises, outside my cinema hall because of this. See, I am not saying that you are doing wrong. Even I like all these things. But people who are coming, no, they don't like, Anna. So please, I request, if you could, you and your gang, you all can move somewhere else. I will take care of you. I will, monthly a fixed amount I will keep on giving them, so that they don't come there and they don't start creating those nonsense. Am I paying them an amount as a ransom so that my business runs smoothly? Am I doing that expenditure for the benefit of my business? Yes or no? Wholly and exclusively for the purpose of my business. And that ransom I am giving them on a regular basis. Revenue nature. 30 to 36(1). Nowhere it was allowed. Should I claim it under 37(1)? I will go and I will start claiming under section 37(1). They will say not allowed. Illegal expense. Giving ransoms, giving bribes, etc. are all what? Illegal expenses. Will not be allowed as a deduction. Will you remember this? So first explanation. Any illegal expense, even if it is related to your business or profession, will never be allowed as a deduction under the head PGBP under section 37(1), because it is assumed as if it is not incurred for the purpose of business or profession. Sure, no? Now one same question I am asking you, similar type of question. If illegal expense is not allowed as a deduction, what about the illegal incomes? Should it be taxable? If expense are not allowed as a deduction, then illegal income should not be taxable. Or should be taxable? Should be taxable. Why? Income Tax Act does not differentiate between income, whether it is legal or illegal. Even the legal income will be taxable under the Income Tax Act, and illegal income will also be taxable under the Income Tax Act. But you will have a doubt. Now sir, who will go and show their illegal income to the government? See, 4 murders done in this year. 1 crore rupees for 1 murder, 4 crore PGBP income. I will charge tax on this income. Will anyone go? I have sold cocaine, drugs, etc. This year I have sold drugs worth 10 crores rupees. Will I calculate my PGBP income on sale of drugs, and will I go and tell them? No. But what if they catch me and they come to know that I have earned this much income? Then they can very well charge that income under the head PGBP. Understanding or not? So can my illegal expenses be claimed as deduction? No. Illegal expenses will not be allowed as a deduction. But illegal incomes, income from illegal activities, may be taxable if the assessee is caught. Now a case happened very long time back. Long time back a case happened. In that case what happened now? Assessee was caught with stock of drugs, cocaine, heroin, hash. You know now that drugs and narcotics. So assessee was having a huge amount of stock of these items. So there was a raid which was conducted in his premises, and in that raid the drugs worth 10 crores was seized. 10 crores worth of drugs was seized, and he was caught by the police. Narcotics department, no, they came and they caught him. Now when they catch, no, they inform all the other related departments also. So narcotics department caught, they conducted a raid and they caught him. They informed income tax department also. Let's see, we have caught this culprit with so much amount of drugs. Definitely he would have earned crores of rupees by selling these drugs. Come, now the income tax officers will come. They will also start finding out that how much income you have earned, and they came to know that bloody you have earned 50 crores rupees by selling this drugs, etc. That was your income of illegal activity. What they did, they calculated your PGBP income. 50 crores income from sale of drugs minus expenses. No expenses minus. Full 50 crores taxable. Because illegal income fully taxable, no deduction. For any expense, any losses, no deduction. Now this assessee who was caught, no, he became furious. Because he was an educated person, though he could not clear final CA, okay, but he was aware about the tax provisions. He asked the assessing officer that, AO, come here. Why are you charging this income? Income Tax Act does not differentiate between legal and illegal income. So this illegal income will also be taxable under PGBP head. Oh, so you are charging this income under the head PGBP. Why? Because your business is to do these illegal activities, and from these illegal activities, this income you have earned, so it has to be charged under the head PGBP. Do you have any problem? No, I don't have any problem. This has to be my business income because my business was to sell drugs. So this is my business income. But you cannot charge this 50 crores. Because charge is not on gross income, charge is on profits. Why are you charging gross income? Calculate profits and charge profits. Why do we give deduction, this and that? You will have to give me the deductions. All the legitimate expenses which would have been allowed if this income would have been legal income. Would you have allowed my rental income, rental expense? Yes. Would you have allowed my salary? Yes. So all the legitimate expenses I am incurring, those legitimate expenses should be allowed as a deduction. Yes or no? Only then the profit of my business will be there, and the charge under this head is not on the gross income of my business. Even though my business is legal or illegal, the charge is always on the profits, and you'll have to calculate the profits by giving me the deduction for my expenses. So what type of expenses you have incurred? I have incurred this expenses, I have incurred that expenses. Many expenses were legal, many expenses were illegal in his business. And he wanted to claim all the expenses as a deduction. All the legitimate, genuine expenses were allowed, but this was not allowed. Even if your illegal business is there, from that illegal business also, these illegal expenses will not be allowed. All the legitimate expenses are allowed as a deduction from your legal business as well as illegal business, but illegal expense will never be allowed from your legal business as well as illegal business also. Understanding? So just because your illegal business income was charged, that does not mean that you are going to get the deduction of these illegal expenses from there. You are giving bribes to police officers. Don't come and don't raid in my premises. You are giving bribes to politicians, etc. Because they were also aware about this activity. Yes or no? So in your illegal business, you must have done these type of illegal expenses. So for you, will you get any deduction? No, you will also not be getting. Whenever the profit and gain under the head PGBP will be calculated, whether it is calculated for a legal business or an illegal business will not make any difference. Illegal expense will never be allowed as a deduction. But do you remember, some stock was confiscated? The authorities conducted the raid, and in that raid, some stock was confiscated. What was the value of that stock? Was it a profit or is a loss incurred in the course of business or profession? My business is to buy and sell drugs, and in my business, the raid was conducted and my stock was seized, confiscated. Isn't it a loss happening in my business? That was allowed as a deduction. Because without adjusting the losses, profits cannot be computed. It's a landmark Supreme Court judgment. He paid because the stock, etc. was seized, the income which was, recovered, that was huge. That was huge. It was not in 2-3 crores. It was hundreds of crores. Because he had been doing this activity since a very long time. Understood? And by the way, he was the person from my same community to which I belong. Mr. Kotecha. Very famous case law. Kotecha, Supreme Court. And he belongs to the same community, unfortunately, to which I belong. So not that proud of him. But, okay. So, did you understand this much? Wait. Let's think about legal business. Do you have any legal business? Out of that legal business, whatever income you are going to earn, from that income, all the legitimate expenses you can reduce. Illegal expenses you cannot reduce, and the losses incurred in the course of that business can be reduced. Legal business done. Illegal business. Profit of illegal business can be taxed here. Profit will be taxed. Gross income will not be taxed. So to calculate this profit, income of illegal business minus all the legitimate expenses which could have been allowed will be allowed. Illegal expenses. Even if the business is illegal, illegal expense cannot be claimed as a deduction here also. But any loss incurred in the course of this business will also be adjusted to determine the profits. Understood? Sure? Okay. Now, there is another explanation, explanation number 2. This is relevant in the case of company assessees. Which assessees? So, if the assessee is a company, if the assessee is a company and assessee has incurred, company has incurred CSR expense. Do you know about CSR expense? What is that? Law is done, no? Which section? 135 of the Companies Act 2013. So as per the section 135 of the Companies Act, any company having certain amount of net profit, out of that net profit, certain percentage, 2%, has to keep aside to be spent for certain activities known as CSR activities. So first of all, you are a company. Yes. You have certain amount of profits or turnover, etc. Conditions are there, no? Under section 135. So if you fulfill the conditions of section 135 of Companies Act, what happens? You have to set aside certain part of your profit, certain percentage of your profit, which you have to spend for what? Certain activities, which are known as CSR activities. That is a responsibility of a corporate to contribute to society in such manner. Out of your profit, use some profit for the society. That is your responsibility as a corporate. So as a corporate, what is your responsibility? To spend some portion of your profit to certain activities. Those activities are known as CSR activities. So there is company's CSR rules. In that company's CSR rules, certain activities are mentioned. On those activities, you have to spend money. Any amount spent by you on CSR activities, if that amount is covered by any specific section, then claim that amount as a deduction under that specific section. If that amount is covered by section 80G, claim it as a deduction under 80G. If that amount is covered by section 35, claim it as a deduction under section 35. So the amount which you have spent for CSR activities, if that amount is covered by deduction under any specific section, cover that amount in that section and take that deduction of that section. But if the amount spent by you on any CSR activity as a CSR expenditure is not covered by any specific section, you cannot claim it under section 37(1). Explanation. Because 37(1) gives the deduction for expenditure. CSR activities, whatever amount you are spending, no, is not your expenditure. Some part of your profit you are keeping aside and spending on those activities is appropriation of profits. This is not your expenditure. And by the way, 37(1) we give the deduction for expenditure. So first of all, ask yourself, the amount spent by me on CSR activities, is this amount covered by specific section? Claim it there. If this amount is not covered by any specific section, then this amount is not your expenditure. We cannot allow it under section 37(1). Because 37(1) gives the deduction for expenditure. This was not your expenditure. This was appropriation of your profits. Will you remember? See, this is written here. Read it once. Do it fast. Assessee is a company incurring expenditure on certain CSR activities, meaning certain percentage of your net profit has to be spent by you on the CSR activities. After net profit, whatever amount you are keeping aside and spending on the activity is not your expenditure, is not your expenditure. It is appropriation of profits. Cannot be claimed under section because 37(1) is allowed for expenditures, not for appropriation of profits. So if this amount is not covered by any specific provisions of the Income Tax Act, then it cannot be covered by general deduction. Cover it under specific section. If it is covered by specific section, claim it as a deduction over there. But if it is not covered by specific provision, then it cannot be claimed under general deduction because this is not an expenditure. Understood? Should I move ahead? Explanation number 3. Which explanation? Now explanation 3 says that you have incurred any expenditure for any offense. So expenditure is incurred for conducting any offense. Giving money to someone to kill is an expenditure on offense. Giving money to someone to do insider trading, it is amount spent on offense. So if any offense is being done and to do that offense some amount is spent, we are not going to see that whether this was required for the interest of your business, this and that, blah blah blah. No. If any expenditure is incurred for any offense, to perform any offense, that expenditure will not be treated as incurred for business or profession, will not be allowed as a deduction. Or sometimes some offense is done and person is caught and he is supposed to go to jail, but to save himself from going to jail, he can compound his offense. He can. Do you know compounding of offense is done? What is the meaning of compounding? If you have done some offense and you are caught, and for this offense, if there is a punishment that you have to go to jail and also pay penalty, but you can save yourself from going to jail by giving extra amount, that is known as compounding. So are you compounding your offenses? For that the money is spent. That money will never be assumed that it was spent for business or profession. Will not be allowed as a deduction. Few directors of the companies are caught doing some illegal financial transactions. Black money transaction, hawala transaction, and it had links with terrorist organizations. So directors of the company are caught doing such transactions, financial transaction, and the nexus, the connection got established with the terrorist organization. They are caught. Now they are going to go to jail and pay the penalty also, but to save them from going to jail, company paid what? Compounding money. Will the company claim this amount as a deduction from business income? No, not allowed. Explanation 3 says that any amount spent for compounding the offenses also will not be considered that it is incurred for business or profession. The company cannot give the argument, see, without the director, the business will not work properly, it will affect the operations of the business, so we'll have to give the compounding money to save the director so that the business can run smoothly. Bullshit. Amount is paid for compounding the offense will not be considered that it is spent for business or profession. Will not be allowed as a deduction. Come what may. Yes or no? Now sometimes an expenditure is incurred in the form of amount given to any person which that person cannot legally accept. The person giving it can give that amount, but the person who is receiving that amount is legally not allowed to receive that amount. You are a chartered accountant, you sign audit reports. Yes or no? As per CA regulations, you cannot take the money from the company officials to sign the audit report according to their wish. So it is not allowed to you. But the company can give you any benefit. It is nowhere written in the law that the company cannot give that amount to you. Company can give. Let's take another example. No, pharma companies are there. Pharma companies. Pharma companies will sell medicines. Now, how will you come to know about the medicines of the pharma company? How will you come to know? Doctor will prescribe the medicines. So the pharma company will sell their representatives to the doctor. That doctor should prescribe our medicines. Headache is there, give the medicines of headache plus one multivitamin. Nowadays, if you'll go and see the prescriptions of the doctor, no, the doctors will prescribe medicines of a specific pharma company. And along with that medicine, which is required to treat that disease, they will prescribe 2-3 extra medicines also. This is required to keep the multivitamin levels, intact in your body. Vitamin D3 is less, vitamin B12 is less. Take this syrup, take this multivitamin tablets. Oh, you are feeling weak also, no? So this will treat the weakness. Bloody, in fever, no? Fever, cold, cough, everyone will feel weak. Because the immune system of the body becomes weak at that time. Because the entire machinery is fighting with that virus inside the body. That is the reason the body becomes a little bit weak. But the moment you recover, no, that weakness automatically goes away. There is no requirement to have any multivitamins. And by the way, those multivitamins and those medicines, extra medicines which the doctors are prescribing, no, they are not going to help you also. That is just a red color or green color colorful pill which you eat, does not have any benefit inside your body. You automatically get cured over a period of time. As the time will pass, automatically the weakness will go away. And you will think that you are being cured by that multivitamin. No. Everything right now going on is like this only. Now tell me, this doctor will prescribe the medicines of the pharma company. Okay. The pharma company has sent the representatives. That representative is telling the doctor, see, you are treating the fever, you are treating the stomach ache, you are treating all the diseases of your patient right now. Along with that medicines, prescribe these medicines of the company. As what? As multivitamin tablets, this and that. Yes or no? If you'll do it, if in all your prescriptions we can see that this is happening, the pharma company is going to give you this benefit. Freebies will be given. Some extra cash, etc. will be given. Some commission, etc. will be given to the doctor. As per the regulations governing the medical practitioners, meaning the doctors, Indian Medical Association is the institute, the body. Like for CS, which is the highest body? ICI. That governs the profession of chartered accountancy. And as per the CA Act, there are regulations which are binding on the members. Just like that, Indian Medical Association is the body which governs the conduct of medical practitioners. What you should do, what you should not do. As per the regulations of Indian Medical Association, you cannot accept these kind of freebies to prescribe the medicines to your patients. You cannot write the name of a specific pharma company. You can just write the name of the formulation which you are prescribing. Then it is the patient himself will decide that which pharma company's formulation he wants to buy. But you cannot give the suggestion of a particular company in your prescription. That is not allowed. But still the doctors prescribe those medicines. And for that, they are paid good amount as commission, freebies are distributed to them, 6 nights, 7 days, Paris, London, these pharma companies spend so much money on these doctors, and that is required in their business. They are not doing something bad. So to do my business, to sell my medicines, I have to tell the doctors to recommend my medicines. What bad thing I am doing it? If the doctor as a professional is recommending my medicines, so out of happiness we are distributing some freebies, we are giving some amount as a commission, as a gratitude to that doctor. What bad thing we are doing? So it is not illegal if we give, but if it is illegal if the doctor accepts. It is not allowed for the doctor to accept that money. So earlier what used to happen, these pharma companies used to claim the deduction of this expense, saying that we are not doing any illegal expense. Under any law, it is not written that we cannot give this amount. We have not done any illegal expenditure. The expenditure is done legally. However, it is not acceptable, not to be accepted by that doctor. That is their lookout, not our lookout. We should be getting the deduction, and they were claiming the deduction also. Then 2 years back this explanation came, and from now onwards, even if you are giving, you are not going to get that deduction as per explanation number 3. Because the person to whom you are giving this amount is not legally allowed to accept that amount from you. So any amount which you are spending for your business, for you it is allowed to spend, but the person to whom you are giving that amount is not allowed to legally take that amount from you, legally accept that amount from you. Then also this amount will not be allowed as a deduction to you. Explanation number 3. So any expenditure incurred for performing any offense or compounding any offense will not be allowed as a deduction. Any amount given to any person, and that person is legally not allowed to accept that amount will also not be allowed as a deduction. 3 explanations. Will you remember? So 37(1) is done. Okay. Read this part and let me know, are you are understanding anything out of this or not? I've already explained this. Losses incurred in the course of your business or profession. Can you claim them as a deduction? Huh? Losses incurred in the course of your business or profession. Can you claim them as a deduction? But you cannot claim them under section 37(1) as expenditure, because they are not expenditure. But still they are allowed as a deduction. Why? Because the charge is on profits, and profits cannot be computed without adjusting these losses. So for these losses, deduction of these losses, for the deduction of these losses, specific provisions are not required. What is required? Common sense, which is very uncommon. That is why I have written uncommon sense is required. Okay, done? Now from here we will do after the break. Take a break for an hour. After 1 hour we are meeting and we'll continue and we'll end the deductions and disallowances also we'll try to finish today itself. Okay, no? We'll try.